Okay, thanks for sticking around, everyone. Now we do the after hours, and Alistair's a little bit of a younger fella. He's a millennial. He just told me, so he's gonna enter into the great sour debate of the market huddle. And shockingly, being a younger guy, he doesn't think they're the worst thing that's ever come around. Um, Alistair, tell me why you think that sours shouldn't be just kind of extinguished off the face of the planet.
Well, sour. I like sours. I'm here in Baltimore. The cat's out of the bag, by the way, with the millennial thing. But there was some tax incentive. I don't know if it was like every state across the U.S., but definitely here in Baltimore. Right around that cycle turn, 08, 9, 10, and probably around like 12 to 14, we had a massive explosion of these microbreweries everywhere. And one of the big moves here in Baltimore was sour beer. And
Right.
it's a hard beer to acquire that taste first, because you're saying this is like a Sour Patch Kid. But eventually get used to it. I didn't mind it, but I think what happens with too much sour beer, you may get heartburn.
Well, I think you used the wrong adjective there, Alistair. You said it's a hard kind of to acquire the taste. I think the word you meant was impossible.
Maybe, maybe, but
No, you know what? I know. I went out, as I've told the story before, I went out with a young millennial kind of macro trader, and he was into all these craft beers, and he took me out and we went out and he made me drink a sour, and I couldn't believe how bad it was. And then Patrick talked to a couple of sponsors and allowed them to sponsor our show, and I had two more sours I had to drink, and that's why I took
Well, come on,
over
12
and
Minutes to
insisted on a
Destiny was
stout.
a phenomenal sour.
Was that the
Yeah, that
raspberry
was
one, Patrick?
delicious.
well, you know what it could be. It could be the Canadian water.
Oh,
I don't know about the Canadian. I don't know about U.S.
No.
water, but there could be something
Well,
up the water.
I don't know. Patrick's cut off from talking to the sponsors. I'm
no,
cheesing
we're
them
gonna
off
we're
from now
gonna
on.
have Lena do all
Okay.
the sponsor talks now from now.
That's right. And Lena's my kind of gal. She's already told me that she likes this one. Okay, so now let's get into the stuff. Now, I know you wanted to talk VIX, or at least I saw some charts.
Yes,
One of the
yeah.
things that makes you worried is the kind of the growing short VIX trade that's out there again. And I was wondering if you wanted to kind of talk about that. It's interesting. I love talking VIX volatility. It's something near and dear to my heart. So let's get into it.
Great. So, here in Baltimore, we have these, and all up the East Coast, we have these steeplechase horse races, and of course, it's finance community, whole nine yards. And I was talking to this one individual, a very big firm down in Washington D.C., and you were talking. He's like, "So you're not short the VIX?" And I was like, "No." And this is about 2-3 weeks ago when maybe about a week ago, cot positioning came out on the VIX, and we had, I believe, record lows or
Yeah.
thereabouts. And exactly what we see today is the short vol complex unwinding, not just shorting volatility, but it's like the MSCI low volatility index that I showed everyone earlier. You can see that these strategies that worked when the administration and the Fed came out and became very dovish and had all this trade optimism, those strategies today are not working as well. So, for example, buying the dip has not worked in the S&P mini for about 7 to 8 trading sessions. So maybe we're at an inflection point very similar to late September, early October.
Music
But
to my
that's
ears.
I don't have a
Music to
crystal
my
ball.
ears.
Yeah. So I love that kind of story though. So this is a hedgy guy, right? Or was it a regular money manager
This
that you were
this was
talking to,
this
Alistair?
this this was a hedge fund
Yeah.
that actually
And
had they had a bunch of positions with Uber, Lyft, Boeing. They had 400 million in Boeing. I mean,
yeah,
this is a serious firm. And the one
right.
thing that he said to me, and this is VIX at 12 or 13. You're not short the VIX.
That's right. Well, don't you know, Alistair, the best way to hedge your long position in Uber and Boeing, all those stuff is short VIX position.
I mean, after today, that could be the case, but I
No,
mean,
I
but it
know it's
shows,
kind of
but the IPO market, it shows us to the environment that we're in today. It's artificial. I mean, it took government intervention and central bank intervention to get us to these levels, and these IPOs aren't working. So that tells us that we may have a liquidity issue.
Right.
Yeah, no, that's interesting. I will give you one trade that I'll kind of push back on the VIX trade. Obviously today it got shot, so I'm not sure if I missed the trade,
So yeah,
but
here's
I
your VIX
really
chart right
like,
here, so you can see that big move.
Mhm.
yeah, I really like shorting VIX against long fixed income vol, and I realize that's kind of a complicated trade, and I know you already mentioned that you're not a fixed income trader, so it's not something that you're doing. But if you look at fixed income vol, like Patrick, can you pull up the move? I don't know. Are you able to
I'm
get
gonna
that
try.
index? So the move, which is basically the
No,
Merrill
I can't
Lynch
get it
fixed
on.
income index, which is the vol of it was ticking around like all time lows basically a week ago, and or even 3 days ago. I think it was kind of not that far off the bottom, while the VIX was sitting there kind of 22 or whatever it was. So on a relative basis, because they're still financial assets, we should go together. I pulled up a chart, and you know what I'll do? I'll throw it into the email
Does
that we
this?
send out to all our listeners.
I've
But
pulled up here the 10-year Treasury note volatility futures. Is that a good? Is
yeah,
that a
so there
good?
you go. You can see that it hasn't. Yeah, it's close enough. It hasn't spiked. It hasn't spiked with the VIX out of the range, and it was just like pretty low. But if we plotted the move versus the VIX, it was actually the Treasury vol was as low for this reading of VIX that we've ever
Right.
had.
Mm.
Meaning at this VIX level, Treasury vol was as low as possible, like in the last like recent history. So I'll include that in the email. For the more kind of sophisticated traders that want to kind of put on that sort of trade, that is something to think about because I really like that trade. The only thing is that as central banks, become more and more interventionist. And I saw that Lena, I don't know how to say that, Brainerd, I'm not sure how you say her first name, but we'll just say Miss Brainerd, the Fed governor, she talked about pegging the yield curve. And if they do that, that's sure going to crush that trade. That's all I can say. That's not going to be a good trade if they do that. So it's assuming that they continue to let the long end trade. But I do find your concept of the fact that the Fed's going to be increasingly pushing on a string and that we're going to hit this kind of point where it's not going to work anymore. Interesting. Do you worry at all that that's consensus? Like, you don't seem to think that that's the case. And obviously, when you talk to hedge funds that are shorting VIX and buying crazy kind of new issues, that doesn't seem to be the case. But for me, when I go look at Twitter and I kind of look at all the hedge fund, and I talk to them, they seem to all be bearish. And I don't know if I'm just talking to too many zero hedge types. I hang out with too many of Patrick's friends, but what do you think about that, Alistair?
I would say it depends on who you speak to. Definitely, I would say specific individual, or I would say just specific audience that each of us have on Twitter is a different echo chamber. Um, I would say that there's a consensus in a broad spectrum of things that the Fed will prevail, that the intervention will work again. Specifically, look at China, the stimulus in January, and looking at equity indexes in China leading higher in January, and the world betting that the stimulus in China was going to work. And we get to this point 3-4 months later where that's not the case. We don't see this synchronized growth around the world anymore. So I think that's a very big hint that possibly the effectiveness of these central banks globally, their toolkit's limited. And going to the Fed here, they may be able to lift asset prices to levels that we haven't seen before with another round. But will that move the real economy? Will that help the middle class? The bottom 90%. There is no middle class anymore. I think we can firmly say that it's the bottom 90%. I mean, is that going to help the bottom 90%? And I don't think so. It's only for the elites, the 10%, the 0.01%, if we get another round of this stuff.
Right. I know. Now,
Right.
So it's not. I mean, it's not going to make America great again, as
So I have a
so to
question for
speak.
you. So I would say that would you agree? Do you follow David Rosenberg's work?
I do. Yes.
Yeah. So your kind of idea seems very similar. Like, you seem to be on the same wavelength as Rosenberg. Am I correct in assuming that?
To an extent, I rarely say the word recession. I say slowdown. I mean,
Right. Okay.
in this industry, we all know that timing is one of the most difficult parts of this job, specifically with interventionists out there. You think that a turn is going to occur, and then you get a comment, you get an injection of credit, you get something,
Right.
and that's the most difficult part. So you have to be careful of what you say and how you say it, and yes, I'm on that similar wavelength. But as far as recession, I don't know, because we could get an injection, we could get infrastructure in the
Okay.
U.S. There's so many things that could happen. But the question is that going to be effective, and how long? I think it's like black hole economics. Is that the more we're going to need a greater amount of stimulus, but the time or that duration of its effectiveness, I think, is going to be cut short. And that's like, so. For example, the debt fuel tax cuts. That was a fiscal injection, and that was only a year or a year and a half or thereabouts, and that mainly went to the corporate world with one-time payoffs to like $1,000 to some Americans. But I think it's the duration of how long that injection, or if that's fiscal or monetary. I just don't think it's going to be long term. It's all short term. And if we get that today, it's all going to bridge this administration to 2020. That's all that this is for. So, for example, debt fuel tax cuts was to bridge the administration to the midterms. And then, if you remember, right around the midterms, we heard all these comments about Trump tax cut two and so forth, that we need Trump tax cut two. But that was just another fiscal injection. And the administration was betting that if they could get that through, that could bridge them to 2020. And then we are where we are today, which we don't have that ability to do, I think, any more fiscal stimulus to that extent. Infrastructure is being floated around. Supply side with economics, with the trade wars boosting restocking, bringing this artificialness to this economy. But I think the reason that the administration wants QE and rate cuts is that their policies are ineffective to get them to 2020.
Right. So I guess my pushback to you is that I understand the arguments. I just worry about what's priced in the market, and I know when you look at risk assets, they seem very, very rich, richer. And it's hard to argue with you that, like, it doesn't make much sense that S&P is pushing new highs if we're going to have a slowdown in growth. But when you go and look at the fixed income market and you realize that it's signaling something much different than what the risk assets are signaling, you kind of have to ask yourself who is correct. Now, I'm the first one to say that the bond traders are smarter than us equity guys. They seem to get it more often than not.
That's the smartest
So
thing
you
you
could
said
make the
in this
argument
entire episode.
I mean,
about the
you make a perfect point. If you look at the S&P 500 over U.S. 10-year yield, you can see a massive divergence starting right around the we'll call it maybe January 15th, maybe February timeframe. Just a huge divergence, and people have pointed out that gap before. It's just the only idea is that when the market tries to revert, understanding that the bond market is right, you get a comment from the Fed or the Trump administration, or both. And I think the idea of the equity market going to the upside is just intervention, and the bond market has it right about the swelling. For example, we can look at not just world trade, but we can look at U.S. Manufacturing PMIs, U.S. non-manufacturing PMIs, and they're rolling over with world trade. So I think the bond market has it right. I think the equity market is drunk.
Oh,
They're drunk
this
on
is
hype.
music to my
They're drunk on
ears. Keep going, Alastair.
hope.
I'm
They're-
enjoying this. This is perfect.
yeah.
Keep going.
I can sing if you want. I can sing. But they're drunk, and why are they drunk? They're drunk for one reason only: is interventionists are commenting on a daily basis. Any correction except for now, which I think the administration wants markets lower so that they can get what they want, which is stimulus. But before, from Christmas lows to, we'll call it May 1st or so, we had the Trump administration, the Fed, coming out every single day. Every technical support, every level that they thought the market was going to correct, they would come out and spread trade optimism, hope, and hype, and a greater tomorrow.
Kudlow's never done that.
Okay, so here we go, Alistair. Alistair, I have a question for you. So we get a rollover in the economy. Is the Fed quick to cut rates, or are they slow? Do they drag their heels?
Well, I think we have one hike this year. I don't know which Fed member, but
No,
I mean,
no, we actually have in the next year we have one. Right
Yeah.
now, the market is pricing one
Right.
cut.
Let me put that up.
So-
let me
In
just
the
put
next
that
year.
up here. Hold on a second here. So,
So I have rate trader. I have rate traders on my terminal here and looking at them. But it's interesting because the Fed's saying we're going to get one hike this year, which, by the way,
like you're saying, the Fed's forecasting one hike.
Yes,
That's
yes,
correct. But the
yes.
market is pricing in
Right.
one cut.
Oh yes, about 30.
Okay,
So
okay.
January 20. So this year they're pricing in about a 20 basis point for December 11th. January 2020 they're pricing in about a 30 basis point cut. So we've actually been in the past few months anywhere from 30 to 55 basis point cut.
so here I
Right,
have
okay.
the June
Yeah.
over
So my
June
question
here,
is,
which
so-
they're showing 27 basis point cut.
Right. So my question to you is, Alistair, we get your scenario plays out. We have a tough summer. The economy rolls over. We get into this situation where the economy is sucking, and the Fed is all of a sudden listening to Trump scream about cut rate, like that he needs lower rates. And are they? And let's just say inflation doesn't collapse. It doesn't give them the what they're looking for, because I don't know if inflation is going to collapse or not. But let's just say it doesn't. Does the Fed follow it quickly, or does it drag its heels? Like, is the Fed going to do Trump's bidding? Is what I want to know, or what I'd like your opinion.
I mean,
on.
what we just had today was Bostic come out and basically say that if the trade war deepens, we're going to cut.
Right. Okay. So
I
that's
think-
that's Bostic, though. What does Powell do?
Yeah.
It's tough.
Yeah, no, and just
it's
listen.
very-
Of course, it's just your opinion. So I'm just curious what you think. Like, are they going to be slow? And if they are slow, I'll tell you this: if they are slow to cut into an actual slowdown, then I agree with you that risk assets will get destroyed.
Yeah, I mean,
So
I
if
think
your scenario comes out to play and we get a slowdown and then they're slow to cut and Powell drags his heels, then it's going to be an ugly, ugly summer.
and that's exactly why the administration is deepening the trade war to drive the Fed to cut as soon as possible.
Wow.
So
I
you
mean,
think they
that's-
purposely want to make it bad because they just want to get rates lower?
Yes, I mean, look at Kudlow, look at Mnuchin, and look at the whole crew.
This is where
They-
I circle back to even like where Pippa Malmgren was talking about these types of things. It's so much more than the financial asset side. This whole trade war is much bigger than just whether the stock market is higher or lower or where interest rates are. I mean, there's some serious issues with China. And I think the administration at some point has to draw the line with China in terms of protection of all sorts of copyright laws and all these other issues that they're having. And I just think that they're going to fight this a little bit. I think they're going to dig in a little bit deeper. And it's not those people that are just thinking that the stock market's more important and that Trump is going to put his tail between his legs on this. I don't think so. I think that this trade war lasts longer than everyone thinks.
Well, of course. So look at January this year. What did we see? Stimulus. China knew what was happening. They understood what was happening. A deepening trade war. They had to prepare. They prepared for stimulus. Now, what is Trump doing? Trump wants QE. He wants the stimulus with that. He wants the rate cuts. So you can see that both sides are building their stimulus. They're for a deepening trade war, and that's exactly what's playing out today.
Right.
I mean, we're in the beginning innings of a trade war. If anyone thinks that this is over with a trade deal that's coming, I mean, it's coming. It's just we don't know when the time's going to be. But you have Europe to deal with. There's multiple studies detailing how the automotive tariffs that the U.S. is going to slap on, how that could be as worse as the Chinese tariffs. And then, of course, we got to deal with Canada, and we have to deal with the U.S. has to deal with Canada and Mexico. So I don't see any resolution this year. I see that it will likely deepen. The idea is how do you hold China accountable? You get a deal. How do you hold them accountable? And I think that's going to be very, very hard. My view here is that President Xi is in for life, or much longer than this administration. And this administration has another few years left. So time. In my belief, what happened with the Trump administration by bailing out the stock market, I think that I don't know if I want to say it's his Achilles heel, but I want to say that the administration made a very big error by pumping the stock market with trade optimism. Maybe because the deal was going to come to fruition, or maybe it wasn't. But the administration just wanted the markets higher, and they may have said fake trade news. I have no idea. But that wasted 4 or 5 months of this administration, while he could have just slapped the administration, Trump, Lighthouser, could have slapped those tariffs December 31st or March 31st. And then would have created more issues for the Chinese. But that's what the Chinese are doing. They are trying to make this last as long as possible, so that maybe the administration caves, or maybe the administration can't come to a deal before the election year. I just don't exactly know. But what I do know is that the Chinese have time, and this administration does not.
So, Alastair, I completely agree with you there, bud. And it's not that I think that the Chinese are so much smarter, or that this line about they're playing Go and everyone else is playing checkers, because I call bullshit on that. I just think that they're not as their cycle is a lot longer than ours.
Of course,
He doesn't
2020.
need to,
Yeah,
right.
2020,
He doesn't.
2025.
Z doesn't need to worry about kind of the next headline, or the even next year's headline. He can play for the longer game. And
if we had to look back, if we had to look back in history, 5 years from now, we're all having sours at some bar in Toronto.
You're welcome up here anytime, by the way.
If we're all having sours, and we're talking about this, I think that focus we would have 5 years from now would be time. Would be the Trump administration did not have the time to implement the policies to get the Chinese under their arms or under their belt, so that they could have an effective deal. And I think that's why the administration is going to have a deal, but it may not be a deal that's enforceable, or it might not be an effective one for the U.S. in the long term.
Yeah, it'll be interesting to see, because I'm not as sure. So I agree with you as well about your analysis that the Trump administration was foolish to tie themselves to the performance of the stock market.
Because
it's almost like it made him vulnerable to the stock market, going down, because he's made that kind of a signal for how well he's doing.
So let me give you an example. A month ago, 3 weeks ago, we had FT headlines. We had headlines from Mnuchin. They said 90% completion of the trade deal, or the headlines say, and this is all filtered out from the administration. Let's say that that's what this administration has, is they have these headlines sitting in queue with major wirehouses, and they're just ready to go sometimes. So what we saw was all this propaganda from the administration put out through the FT. Usually it's from the Wall Street Journal. And they were making this deal sound like it was much better than it was. And I think that deception there is the downfall of this administration in getting a deal as soon as possible, because they wasted time. And the idea of why they wasted time was to boost the stock market, which they shouldn't have done that. But for whatever reason, Trump is solely focused on the stock market, because he thinks that's this barometer of how he's doing. Meanwhile, 50 or so % of Americans don't own stocks, or things of that sort. So I don't know why the administration's solely focused on that, if the bottom 90% don't own that many securities, equities,
right.
bonds, so forth. But I think that the time we're all going to have sours 5 years from now. I'm going to put
Nice.
that in my calendar on my iPhone. So if I get a new iPhone, it's just
Nice.
going to roll over, and we're going to have this conversation of what could have went wrong or what may have went wrong. I don't know, but I'm going to say it's the time, the aspect of time. You can print all the money in the world, but you can't print time. Time is, you can't even put a value on time. And I think the administration wasting time to boost some stock market in the U.S. Was a very big error that they did, and they should have slapped China with the 25% or so raise in tariffs on the 200 billion. If not, then they should have done it in March to put pressure on the Chinese economy because they are heavily indebted. And every day on my terminal here, I see these headlines: this Chinese company misses this debt payment, this one does this, and there is stress. China is swelling in a very big way. If the Trump administration would have put pressure on them much earlier, I think they could have came closer to a deal today or the summer. But if it rolls into next year, you're going to have an issue. And that's why you see, if you look at the administration, they're pressuring Japan for a trade deal. They're trying to get, this administration is just running around the world trying to get a trade deal. Like even today, there was headlines with the administration, or actually there was headlines, I think from Japan or somewhere, that the trade deal of U.S. Japan is falling apart somewhat. So if I had to describe all of this, the administration is desperate. They're desperate because an election year is coming, and they have to have a result.
Okay, so I'm going to change the subject, and this is going to be unusual for me because this is Kevin speaking, and I am far from a squiggle guy. But I wrote this down because I was very intrigued by it. I'm always interested in new technical formations, and I see that you talked about a top bump and run formation.
Right.
Yes.
So I'm curious what that is, and if you could explain that, or because I don't get most of these things. I understand the prairie dog.
It was on
and
the
a few other
Kospi,
things,
right?
but I don't understand what a top.
You're talking about it, right?
Yeah.
The chart.
So, Alastair, explain to us what a top bump and run formation is.
So you have this like impulse move, as you can see in the Kospi here, 200. And the move started around Christmas, and what happened around Christmas, of course, intervention, government, central banks, comments. We all know what happened there, and you get this massive impulse to the upside, and you have this linear line, and the first impulse. So by the way, so the first impulse you have this up move, and then you have this lead in back to this red line. And then you'll just bounce from a lead in to a bounce, lead in to bounce. But at some point, these linear moves break, and that's exactly what we see here. It's called the bump and run.
So here I have it right.
Pattern. Yeah. So,
is that like a football term?
It could be.
So basically, what it is
that I couldn't.
Yeah, no, but basically,
Patrick's
it's just
okay,
a retest of the previous high type of thing before the rising wedge breaks. Am I describing what you're trying to, like? It's sort of like a rising wedge like this.
So maybe what we're going to try to convey here to viewers is what I'm describing as the internals of the rising wedge. The internals, being those waves and contraction wave.
Label it like this if you were doing like a wave count type
correct,
of thing, right?
Correct. Yes.
Okay,
yeah.
So I just googled it.
Real quick.
A bump and run is actually. Sorry, I'm sorry. Go ahead, Alastair.
So you actually have it. You can have these to the upside is what we're looking at, and you also can have these formations to the downside. Now, these are very interesting formations because it will tell you about the distribution of the auction. Is the auction heavily skewed to sellers, or is it heavily skewed to buyers? So once you break that, as you can see here, the Kospi 200, you break that linear ascending demand line, you would then know that the auction is skewed to sellers, and you're going to have overhead resistance unlock. So, for example, a bump and run to the downside, you would then know at some point when you broke over that descending line that the auction would skew to buyers, and then you'll have some impulse and wave formations, and the rest is to be told. But those are I like those formations because it gives me hints of how that underlying auction is skewed. Is it to the
Well,
buyers or
you know,
is it to the
Alistair, I have to
sellers?
say that the one surprise I had in this chart book is that you didn't have any volume by price charts, because that was one of your signature things that I've seen in the past, and I was waiting
Of
for you to
course.
show me
So I
some
have.
volume by price levels, and nothing on your chart book is in there.
Well, when I mean, so we all know this. I mean, these terminals, they're 30 plus grand a year when you have constituent package. I mean, they can go even higher. And I'm at a threshold. I'm at like 32,000 a year for the Reuters icon. I have all these constituent packages, and like another $5,000 to $1,000 a year, I could get this volume profile,
Yeah,
but
yeah,
I couldn't justify. So I have Trading View, which is great. I pay an annual of 300-400 bucks, and I can roll. You can actually roll constituent packages like S&P, CME. You can roll them to any platform, and you don't have to pay like a double fee, which is pretty great. So I have that with Trading View.
yeah,
Trading View, I think, is phenomenal if you're just starting out, or if you're a novice. I mean, they have some great. It's like a
yeah,
crowd sharing platform of technical analysis. People write these incredible, uh, I guess, indicators,
yeah.
and I think these indicators in TradingView are better than a Bloomberg terminal or a Reuters icon
Agreed.
or
Agreed.
FactSet
You
or
know,
any of
I'm a,
these.
I'm a huge fan of TradingView. It's
Yeah,
a great platform. We're doing a shameless plug, even though they're not paying us. But it's a
of
great
course,
platform. It's the
of
one that
course,
I
yeah.
predominantly show during these episodes. Anyway, uh, yeah.
Got a question. One question. Maybe we're wrapping up shortly. What do
Oh
you guys
my
think about
goodness.
crypto? Any views?
Oh, Alistair, I got to tell you something. Last show, I guess I said something that
Oh
set
yeah.
off the crypto bugs.
Uh-oh.
And I don't, yeah.
Are
And
we
I got
diving
like
down a
some
hole
Twitter
here?
things. And this fellow was just, telling me something to the effect that you're going to find out when you're, reaching for crypto when it's, 2000% higher or whatever. And I was like, okay, maybe it's going 2000% higher. Who knows? I don't know. But I'm not going to be reaching for it. I can tell you that. That's all I know.
Well, really,
Um,
really interesting. Let me give you like a kind of like a grounds view of just what I've seen around the world. I'm actually going to go back to Argentina later this year. They're going to probably be coming out of a recession, or they're going to still be in a recession. There's a political some election that's coming up, so their currency, I think the ARS is like 42 to 43 to 1 or something like that. But anyway, so what I saw on the ground is and I said this earlier in the broadcast, people in Argentina are reaching for two things: dollars, Bitcoin, Ethereum, or any other of those quote unquote stable coins, if you want to call that. But it was very interesting to just hear people instead of just reading, and that's what I like to do. What I'm doing in the next couple of years is I'm going to these countries that are safe. They have to be safe on a safe index, or they're up there, that have had their currencies crash. So I'm not going to
Right.
Venezuela. Turkey. I want to do Turkey, but I want to hear and talk. Just kind of like we're all doing. We're having a drink. Maybe we're having sours. Maybe we're not. But I want to.
Yeah.
I'm going to always bring that back, and I already have that in my calendar for 4 years from now.
I
I'll be
love
up
it.
in Toronto, but I want to hear, what people are doing on the ground, because no research report can dictate or just outline what people are doing on the ground to an extent. Maybe they can in a larger view, but what I saw and heard is that people are reaching for two things in a country where their currency has completely collapsed in the last few years. Are first with the dollar, and second is Bitcoin. So I don't have a position. I have not had a position. The only time I had a position was when it crashed from 20,000 to 6,000. I bought 65 or 67, somewhere there, wrote it up to 12 or 13. So I kind of played a bear market. I have. So the cat's out of the bag. I'm a millennial. I'm 29. I have not traded. I have not traded an actual bear market in stocks, but I've read a lot, and understand technical patterns, and maybe I try to look at monetary policy. I think the biggest idea today is understanding monetary policy, understanding what the central banks will do, so forth. And we almost had this bear market, in September. late September, October to December, and it was very interesting to see just how the underlying auction was created. Everyone was trying to buy the dip. Tom Lee was trying to, I got blocked by Tom Lee. He was
You
trying to
got
buy the dip at
blocked.
2,800, 2,700,
You,
2,600. He was 2,500, 2,400, 23. I mean, these
So
individual.
Patrick, listen
oh,
1 second. I have to interrupt. I'm sorry, Alistair. Patrick
oh no, 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 no,
loves
no.
Tom
Okay,
Lee. Just
don't
ask
don't
him.
don't provoke me. But I
Because, I'll just be clear. Patrick, his person that kind of just brings out the worst in him is Tom Lee, and I'm kind of partial to Ross Kerber. So we both
but
have
he
our own
blocked
guys,
you.
and
He
that's it.
blocked you.
But listen. They're both invited on the show. They're both invited on the show. Either
Of
one
course,
of them.
yeah.
You know what? You're invited on the show. Ross Kerber, Tom Lee, anytime.
Yeah. Well, with Tom Lee, trying to buy the dip, and I asked him, are you going to still try to buy the dip? And understanding that we were in a running correction, and that's the big issue today is that and it just all goes back to the central focus that we've had of this global slowdown and the intervention not being effective. We saw that exactly play out. Late Q3, Q4 is the intervention not working, and the individuals buying the dip that the government's going to have their back or the central bank's going to have their back did not work. And of course, they're right. They're only right because they got bailed out. There was an intervention. But now we're coming into a period of, can the intervention continue? And if it can continue, the Tom Lees of the world, Ross Gerbers of the world will be right. But if it can't and the policy is not effective as it once were, that these so-called geniuses are not geniuses. And it's that infamous, or not infamous, but it's that saying that Warren Buffett has always said, when the tide goes out, you'll see who's swimming naked. And those who are swimming naked today is the bet that intervention will work, the bet that a second
Right.
half rebound will be glorious. I mean, we could get a second half rebound, but is it going to be this glorious rebound that analysts and strategists and so forth have projected?
Right.
I don't think so.
Well, Alistair, I can tell you one thing for sure. I don't want to see Tom Lee naked. So, buddy, listen, it's been great to have you on. You are a true millennial looking at, both Bitcoin and Sour. So I appreciate that. One last time, why don't you tell people where they can find you and where they can reach out and learn more about what the products that you offer?
Of course. So the best extension that I have is Twitter. As far as products, it's Twitter. It's
Great.
just look, I have a book. I operate a small little fund here in Baltimore. I write a bunch, that's not for Twitter. But what is just the charts. And I think so. My main and sole purpose here is to give people information that they can't have, or they have to. They can't afford. I mean, not everybody can afford a $32,000 platform every year. So I put out these charts of indexes that you can't find on the internet or anywhere because I feel that many people are misguided with propaganda from the administration, misguided by the central banks. And if I can give somebody a perception of here's the data, it's unbiased, look at it, and if they can make their own judgment for it of something that they can't get anywhere else, I think that's very rewarding. Because I'm going to just tell you this: the one thing I do not like is government propaganda, and I do not like interventionists from central banks and what they have done in the distortion of this markets and the major imbalances that these individuals have created. They have taken a whole, not just an entire generation of millennials, but an entire multiple classes of Americans and put them one-sided and in these markets. And I think that's very dangerous. So I'm here to help as far as giving information that you otherwise couldn't get anywhere else because you need to get these terminals, which are very expensive. And just letting people look at the truth, and I'm truth seeking, and that's kind of what I do on a daily basis. So that's, I think it's the most rewarding part here is to give someone knowledge that they can't find anywhere else, because as we all know in this game, it calls to play. I mean, it's a lot of money to have these systems, and not everybody can afford it. I mean, there's a whole entire class of Americans who their only news source is CNBC, or their only news
Right.
source is Fox News. And
Yeah.
if I can give somebody a different perspective out of propaganda and show them what reality is, I hope that they could make better decisions. And that's why I like Twitter, because individuals like me who are just nothing in the world to the broader spectrum, we can build a following and help people and guide people. And we're truth seeking, unlike
Well,
individuals in government who may not be
yeah.
truth seeking, and they're skewing views. And
Yeah.
but anyways, that's
Anyway, thanks,
yeah.
Alistair. I
I went on.
appreciate.
I went on.
Yeah, you definitely have passion. I love it. A true millennial. I love the passion. I love it. So thank you very much. So follow to Alistair at Stockboard Asset. So at Stockboard Asset, and we look forward to. Hopefully, it's not 4 or 5 years before we get at the Toronto bar for some sours with you there. But thanks again
Yeah,
for being on our show. We really appreciate it.
All right. Thanks,
of course.
Alistair.
Yeah.
Cheers.